Welcome back to the channel where we talk about money scams and how to stay ahead of the game. Today we're diving into the 5 biggest financial scams that have left people reeling and, more importantly, how you can avoid falling victim to them. Let's get right into it. First up, we have one of the most infamous types of scams, the Ponzi scheme. This is where scam artists promise high returns with little to no risk, but they're actually paying early investors with money from new recruits, not actual profits. Sounds too good to be true, right? Some of the most notorious Ponzi schemes have been run by people like Madoff, who stole billions from unsuspecting investors. The key here is always be wary of offers that promise unusually high returns in a short period. They're usually too good to be true. To avoid falling for a Ponzi scheme, stick to investments you understand. If something feels off, ask for transparency about how the investment works. And remember, if it sounds too good to be true, it probably is. Next up, phishing scams. These are the scams where attackers pose as legitimate companies, often through emails or texts, to trick you into giving them your personal details. The catch: once they have your info, they can steal your identity, drain your bank account, and even run up credit card bills in your name. You might get an email that looks like it's from your bank, or a retailer urging you to click a link and verify your account. But it's a trap. Always check the sender's email address carefully and never click on suspicious links. Always double-check the URL in the email. And remember, your bank will never ask for sensitive information through email or text. If you're unsure, call the company directly using a verified number. Investment fraud is another common scam where scammers sell you fake or high-risk investments, promising huge returns. A common variation is pump and dump, where fraudsters artificially inflate the price of a stock before selling off their shares and leaving you stuck with worthless ones. This scam thrives on the excitement of the stock market and the fear of missing out, also known as FOMO. The truth is, there is no such thing as a risk-free investment. To protect yourself, do thorough research before investing in any stocks or financial instruments. Consult with a professional financial advisor, and remember that if someone is pressuring you into making quick decisions, that's a huge red flag. Imagine receiving a message saying you've won the lottery, but there's a catch. You need to pay fees before you can claim your prize. This is a classic lottery scam, and it happens all the time. The scammer may claim you've won a contest you didn't enter, and all they want is your money. The truth: you never win a lottery you didn't enter. And if you have to pay money to claim a prize, it's definitely a scam. Don't engage with lottery scam emails or messages. Legitimate lotteries never ask for payment up front. Ignore these offers and report them to the authority. Finally, we have romance scams. These scams often occur on dating websites or social media, where the scammer builds a fake romantic relationship with you. After earning your trust, they ask for money, usually for some emergency or investment opportunity. They prey on your emotions, so it can be tough to recognize. But keep in mind, a person you've never met in real life asking for money is a red flag. Be cautious if someone you've just met online asks for money, especially if you've never met in person. Don't send money to anyone you haven't met face-to-face and report suspicious activity. To wrap it up, financial scams are more common than ever. But by staying informed and cautious, you can avoid falling victim. Always question deals that sound too good to be true, and make sure to do your research. Thanks for watching. And if you found this video helpful, hit that like button and subscribe for more money tips and tricks. Stay safe, stay smart.